Hello friends, my name is Colonel Mool Bhargava. I am a director of the MB Finance. When you go to buy a home, you're struggling to find out about lots of concepts. You may be hearing words like LMI, LVR deposit, 5% deposit, and you must be thinking that do you really need a mathematics degree to understand all this? Not really. I'll try and make these things simple to you through these series of videos which I'll be presenting one by one. And before I start, just one disclaimer that this is not a mortgage advice. It is just a generic educational video. If you need a specific mortgage advice, you must approach a licensed mortgage consultant or financial planner. Okay, so in today's video, I will be explaining you the concept of loan to value ratio. Now, what is loan to value ratio? Loan to value ratio is the ratio between what loan you want and what is the value of the property you want to buy. To put it simply, say for example, you want to buy a property of $500,000 and you have only $100,000 in your bank. So that means you need $400,000 as loan. Now, ratio of 400,000 divided by 500,000 is 80%. So that means your LVR or loan to value ratio will be 80%. Now, you may ask why the LVR matters. LVR matters because LVR is the core risk metric for lenders. It influences how much risk they have, what interest rate they want to charge, or whether they will need a mortgage insurance, which affects your LMI. So I'll explain to you a little graphically. Say for example, you have 25% deposit in this case, and you need $475,000 LVR. So that means your LVR will become 95%. Your loan amount is 475,000 because you have only 25,000. So the risk of the bank is higher. In this case, they will charge you a higher rate of interest and also the lender's mortgage insurance, which I will explain later. Right? But say if you have 100,000, as I told you earlier, then in that case, you need only $400,000, which is 80% of the loan value ratio. So you will not be charged any LMI and your rate of interest will also be lower in most cases. So this is what the concept between your deposit, your loan value ratio, and your LMI is. I hope you get this one. So for 20% deposit, you get lower rate of interest. Monthly repayments are easy, no LMI, resulting in substantial savings in longer run. So if you have any specific question, here are my details. Please feel free to contact at me anytime. Next video, I'll show you what is a lender's mortgage insurance and how it affects your loan and your cost of the loan. Thank you.